What's up, everyone? Again, Round the Horn here with Bobby, Samson, and Jeremy from GrowthView. We're here to talk to you about what's going on in the world economy right now, and more importantly, how it impacts real estate. There's a lot of stuff going on. We've had some hot and contentious topics. Where do we want to kick it off, fellas?
No, I think you were talking about decreases in, was it new home sales as well as
Yeah,
prices?
month over month home sales, from what I've been seeing in some of the data, the prices have dropped 10% month over month. And just for context for people listening in the future, today is July 28th. So it's a pretty big week. It was a week where some of that data came out. There were earnings for big tech. And as of today, which is Thursday, the GDP numbers came out. So it was a pretty informative week, I would say, for markets.
But we're not in a recession though, right?
No.
We've redefined that.
I'll say that yesterday, I think the Fed did what they forecasted they would do, and then the markets reacted accordingly. They were up overall. The 30-year mortgage hadn't really taken much of a hike just yet. I think in general, they did a decent job putting out what they were going to increase this go around. Now for August and September, if we continue to have these 75 bip hikes, it'll just continue to be the fastest we've seen things increase rate wise in 40 years. So that'll be interesting.
Yeah, I think the stock market wants predictability, right? So if they were to do the opposite, that would probably be pretty negative. So a lot of this stuff gets priced in ahead of that with anticipation, and then responds as you would expect, right?
Yeah. What impact has this been having on real estate? Like, I was reading earlier today just a little bit about markets with the most sales, and I've been seeing a lot in Phoenix, Houston, Atlanta, and Los Angeles, also Dallas, which have historically been really hot markets. Some are still considered good, but I just have a gut feeling that the move into more rural areas is going to remain popular. Like, what are your guys' thoughts with your visibility?
I mean, I saw an article today that said we're moving to a renter nation, right? That's mainly around affordability. I wouldn't say there's any other reason. It's not necessarily a choice, but it's being forced upon people. So I agree, people will drive until they can afford to buy. But we can't build enough. There's not enough inventory, so kind of a double whammy.
Yeah, I've been kind of seeing similar type stuff with as the affordability of a home that you would want to buy as a consumer. Maybe a few months ago is now out of reach, so becoming a renter in sort of that class space, class A or class B, whatever type of product. And then the suburban popularity over the past couple of years, I think, coupled with the remote work situation that a lot of these companies are now flexing into, kind of leaves a nice room for the apartment multifamily space, depending on where the path of progress is. You still want to be able to have, I think, some sort of urban type of feel where you're not bored out of your mind, and there's still like a little bit of retail and restaurant component to it. I think that, coupled with the office space, I've been seeing some decent reports for the flock to quality office space, depending on like on New York City, but the middle tier stuff, from again just kind of what I've been reading and seeing with some colleagues who are lenders in the space for the office type space, a lot more of these landlords potentially talking about converting them to what we have a shortage of, which is housing. So it's kind of interesting. I think we'll start seeing that dynamic and shift in the coming years.
Yeah, we've been focusing a lot on Colorado lately, and I think because of remote work, if you have to live in a city, again, to your point about having stuff to do, lifestyle design becomes probably a pretty big part of that. So people are going to go where they can, be outdoors and adventure and have fun and have the city life, but still maybe be able to afford a little bit better cost of living than like being in a major city, but still be close enough. You were just out here last week, Jeremy, so I mean, it's 40 minutes from where I'm at in northern Colorado to downtown Denver. And then you're within, 10 minutes of hiking, 30 minutes of skiing, and there's 22 skiable mountains in Colorado. So it's pretty cool.
Yeah, no, it's a nice area. I mean, I would say it's less affordable today out there than it was maybe a couple of years ago.
Yeah.
Not cheap by any sense, but everything's relative now, as everything sort of kind of increased in the last 24 months.
My buddy gave me a free ticket to go snowboarding or skiing, and I remember it being like the day pass being affordable. And now when you go up there, they're like multiple hundreds of dollars. And I was like, I will literally never do this ever. The maintenance of a mountain, I was just like, this is insane.
The first all mountain ski pass I got, which was like Breck, Keystone, and a couple days at Vail and Beaver Creek, was like $400 with a student discount or something like that. That same pass today is like $1,200. Crazy.
One thing I've found fascinating is I know we're weird about, and we can pivot from this topic very quick, but just an annotation. We're weird about people collecting water in certain states. And I saw some headlines today about people gardening in their backyard and like creating their own vegetables. We're seeing a lot of, how do you want to word it? Government's trying to ban like fertilizer being used by farmers. Like in Canada, they're trying to ban fertilization use by 30%, which allows farmers not to be profitable. Therefore, land gets foreclosed on, whatever term, and then it gets bought up by someone. Who is that someone? We can talk about that. And it's becoming more prevalent in other countries. And I think we need to have this push into rural areas where we take more care into loving our land and being out of city centers. I think that's a good sacrifice in the short term for our children, but I'd love to hear the quick elevator pitch from you guys in regards to that kind of headline, which has been pretty loud on non-mainstream media.
And there is some innovation coming, right? Like, just look at Tesla, right? With solar, your own battery pack, internet that doesn't need any cables to be run to you. You can theoretically live in a little bit more rural environment and still have all the modern amenities. So if you can bring, electricity and water and internet to a more rural area, like there's a potential for that to create a new version of cities, towns, communities that we haven't seen before, because since 1950, there's been this push to city centers. I think we're seeing a little bit of that shift.
Yeah, I haven't seen too much of that headline. I recently heard a little bit about like ESG scores, and certain countries have kind of adhered to like Sri Lanka, for example, like a 98.1 ESG score, and at the same time they're like self-declared bankruptcy. So it's just kind of interesting how it all kind of plays in politically, and huge companies like Monsanto and others that you know of, I'm sure. So I don't know too much about that world, but it is interesting to see how it all intertwines.
That's a good point. Yeah, ESG's become so political that when they need something, they say, there's headlines, let's make weapons and ESG okay. Let's make nuclear ESG okay. Let's make this ESG okay. It's a big scam. It's a big racket, but we have a capability to really create awareness and things around that, because what's really insightful, I think, for people is just experiencing something. And we've all experienced like the cost of subsidized things go up, as well as like our food, which is really interesting, where we do kind of as a species have to go through the pain to truly understand the truth of certain things. So as challenging as it is, you do kind of have to accept it and go through it in order for the broader economy to understand it, to make a better step forward, I guess, is the silver lining.
Yeah, I mean, we're 2 generations away from, in this circle right here, from our grandparents who knew how to garden, how to can food, who reused everything, who lived through the Great Depression. And we've lost, I mean, I could probably figure it out, but it's not like I'm like, oh yeah, I know how to go build a garden and fertilize it and grow my own food and, do these things. So no, it's just interesting how quickly things shift and we become reliant on the current ecosystem until all of a sudden that's ripped and replaced and we have to go and figure it out, right?
Yeah. Well, to keep this moving forward, guys, one thing we were talking about too, we covered affordability a little bit. We discussed before the call, month over month home sales. We saw some headlines about prices down 10%. I've been kind of monitoring places I would love to have a vacation home, which is like far out there, and I'm slowly seeing prices come down, not at the accelerated rate of 10%, but the number's high, and I know it's really a first step for us. Thoughts?
I'm seeing in San Diego, residential home prices start taking an impact. I'm sure this is pretty correlated with most areas where the more outskirts, tertiary areas are impacted just from in terms of like a demand standpoint. There's less inventory. So in terms of opportunity, I definitely think that that could be prime either today or in a few months from now, as to those homes that you're speaking of. Because I'd love to. Well, I don't have a first home. I more so invest, but a second home would be nice in kind of like a getaway area because we know currently living downtown in San Diego. So I think that's kind of the first domino that we'll see, which is already starting to fall in terms of percentage wise, month over month, and even year over year now.
Yeah, a buddy sent me a screenshot from Seattle. The home across the street's down 20% month over month. It's obviously Seattle's an anomaly where it went absolutely parabolic, but
Yeah, it'll be interesting to see. This is where real estate, becomes a little bit more microeconomic. So it'll be interesting to see who wins the net migration game, whose prices were too far away from the mean, and which ones really get hit hard and really correct hard. Colorado seems to be holding up fairly well. I think there's been a little bit of a pause and there's not as much of a frenzy as there was, but historically speaking, at least where you and I are at, Bob, Northern Colorado's done really, really well. You and I both, you're closing tomorrow on selling a piece of real estate. I closed on one last Friday, and we got a very fair and reasonable price for it. So, yeah, I'll be interested to see. I think it's just grossly associated with rates, and rates up, leverage down. Those things are going to impact price, right? Especially in the retail world, because people look at it, how much can they afford, and that's how all these deals get underwritten, is they back into the deal, look at debt to income, and see what people can actually afford on a monthly payment. So some people are just being priced out or leveraged out.
Yeah. Another thing I've been thinking about, and it's hard to like weigh the options, as everyone loves to say, this is not financial advice, but I've been getting more, I've been very like quick to invest money into real estate and other assets over the last like year, but I'm becoming more focused on just being like cash heavy, just with uncertainty. And I'm sure a lot of people are the same way. A couple of other data points. Walmart is seeing people spend less on standard goods and more on like focusing on food. And even McDonald's, people are not buying value meals and combos, they're buying individual items. Like, one thing that's really interesting as the Bitcoiner of the group, who's highly in the deep end of that industry, is oftentimes assets with the most liquidity are an early stage reflection of what you're going to see downstream in other assets that do not have as much liquidity. And this dip in Bitcoin that we've seen has been a kind of a prerequisite response, as we would expect for other assets having a dip. And we're seeing that even in like markets and where people are spending money. So I think over the next 3 to 6 months, it's nothing creative or new, but we're going to see a pretty substantial shift, I think, in just how people are just spending and acting. Like we're just starting to see it rear its head, but I'd love to hear your guys' perspective just in regards to just those facts that were also shared this last week from like earnings calls.
Yeah, I mean, I know I'm thinking about that stuff personally. I have officially decided to cancel my 1031 to keep my powder dry and shore up my own personal balance sheet a little bit more. And even take a little bit of a tax recapture on that. One thing that's nice about being a full-time entrepreneur is you get the maximum benefit of the tax code. So I will leverage every last bit of that. But yeah, I mean, I think that people are preparing for winter, and you're right. That there's a saying we used to use in the stocks and the commodities market, which is it's already priced, right? And so that's why you see the stock market tend to move ahead and then have like an opposite reaction when the news actually comes out, because there's just anticipation there. And the real estate market doesn't work the way, which is actually probably one of the benefits of it, right? Because if it was just as liquid as stocks, you'd see like 10,000 homes go on the market, and then there'd be a huge wave. But in 1973, the federal funds rate was at 3%, and we raised rates all the way up to 13% and back down to 5% and by 1975, and we were not able to control inflation. You know what I mean? So we're on an equal trajectory, if not even faster trajectory now. And so if you can't figure that out, then you end up with stagflation. And so that'll be really telling of what happens over the next 12 to 24 months.
Yeah, I mean, in terms of cash right now, it's kind of it seems like we're starting to see an opportunity to buy even deals that we're looking at in the smaller space privately, and then place some debt on them. But in terms of, I think, the opportunities that are out there, we're starting to see things slow down as well, because sellers are just realizing it's not the best time to sell. So we'll hold on to the asset a little bit longer and see how the environment shapes up. So I love to, you can never time it perfectly, of course, otherwise we wouldn't need to be here. But I think in general, it's like trying to hedge your way in and not spend all your money or cash right now, but think about how you can deploy it over time, whether it's real estate vehicles or other types of securities. And I don't want to compare it to like catching a falling sword. That's kind of what 2020 felt like when the market dropped that fast. It's kind of been more of a gradual decline since the start of 2022. But I think there's some good valuations today that aren't as frothy as they were last year, especially with certain tech companies and these real estate assets. I don't call them that they were in a bubble, but I think they're just more of a little bit of a correction going on right now. And as to what will happen in the coming months, we just are trying to remain cautious and yet optimistic that is still a good time to buy.
Yeah. One thing that I've really learned to appreciate about real estate is this is one thing Samson really kind of told me, I think 4 years ago, that's really stuck with me, is the shortage of apartments, the fact that many were older, like how value add is so important. And now after COVID, the shortage of homes. So I remain quite bullish on multifamily, mobile home parks, and partially industrial real estate investing. I'd love to hear, Jeremy, maybe from you, and then Samson, some final thoughts here in the final 10 minutes. Like, what are you guys thinking as far as the market? I know it's kind of calmed down. We've discussed in the past how brokers are finally reaching out. It's not everyone just overbidding, kind of like this gambling mindset. We got to deploy money. Like, patience is really starting to pay off. And we're seeing it in the housing market. Prices are coming down a little bit more to reality. How's this really impacting multifamily, and like how should investors be thinking and just like navigating this next quarter, would you say?
Yeah, so I'll start by saying that we all know that we're in a housing shortage, and unfortunately, the number of housing starts has been declining. I think we're at the lowest in 9 months since like September of last year. So that's only going to hinder future amount of supply of houses and homes, apartments, or single family on the market. And then you got that combined with rent today, which has been not keeping up as much with the home inflation or appreciation, if you will, over the past couple of years, but still double-digit rent growth is not normal. It's double or triple, maybe in some places quadruple what we've seen. Little side note here, in the areas that we've seen, 4x the normal rent growth, I think we'll see a bit more of a correction, and healthily so, because that's not sustainable. And then in terms of long-term for multifamily, we're just trying to follow really what the big companies are forecasting and how they're sort of underwriting. So we're partners with some decently large institutional investment firms that we work alongside, and they've been doing it for decades, and they've gone through a couple more cycles than I personally have. So you're not going to get every deal, but I think as long as we're making and communicating with the brokers that are controlling these deals in the multifamily space, that we're still getting in front of as many opportunities as we can. And those true sellers that need to sell for whatever reason, at the end of the day, know that we'll be there to, hey, this is kind of our price. We're firm at it. We have priced in as much as we know today and what the future holds, and we can close based on this price. Won't need to kind of retrade you down the road. So kind of a few different factors there, but still bullish. And just want to make sure that we're buying appropriately and wisely.
When you watch a stock trading chart in real time, you can see the market trying to find price, buyers and sellers, hence the highs and the lows of the market. You can see the trades happening. And so we're seeing that in real estate. It's much slower, but just as an example, we put in an offer on a deal that came out at 34 million. We put an offer in at 25 million, and they countered at 29 million. So it's a $5 million price difference from what their whisper price was. We're still at 25 million. But that this is what I would call the definition of a buyer's market, right? Because if somebody really does need to sell, then they're going to have to meet your price. And so the tides have shifted very, very quickly. So patience is the name of the game. The people that, really killed it in the last 10, 15 years were the people who were patient. And then when the iron was hot, they struck.
Absolutely. Well, this was good, fellas. This is a good check-in. Very timely with the week we've had. I want us to publish this very quick because there's a lot going on this week. So maybe we'll try to get this live before August 2nd or 3rd. But pretty interesting week. Some good information discussed here. As far as the next around the horn, I'm excited to chat with y'all. But any final words we want to just share before we hop off?
I think we should change this to hot take. Hot take.
Around the horn, hot takes. Yeah, just trying to keep things diverse and not just strictly multifamily, but kind of an overarching view as to how we look at things. And you got to understand what's going on beyond just your investment industry. So obviously I think getting timely information is important, like you said. And I'm trying to bring in as much podcasts and YouTube videos live myself right now from those who are, just well-known experts in the spaces. So keep sending them.
Stay ready. Keep your cash dry.
Keep your cash dry.
Yeah, buying season's around the corner.
That's right. All right. Until next time, we'll see y'all soon. Growth View out.